Okay, 3.5 and 3.2 should not get above that. It'll get hairy for the market after that. Ashok Ramdev, thank you very much for joining in today. Let me ask you about the capital gains thing. Get it out of the way, Ashok. Do you think, not the logic of it or the rationale, but do you think it's likely that he will touch either STCG or LTCG?
I don't think so. My own view is, given that government is likely to be short on its revenue collection, they'll be banking on a very bullish market to try and do as much of divestment and sale of public sector enterprises. And that being the case, it is unlikely that the government will disturb the current equilibrium in the market. So I don't think so. The only possibility, given that this government in particular has shown its desire to support long-term investment and not really speculative investment, you can see that in AIF. If you look at AIF 1 and 2, they get pass-through exemption. AIF 3 doesn't get pass-through exemption on the grounds that there is a lot of speculation and hedging that happens within AIF 3. So the only possibility I would think is he may align the period for long-term capital gains in listed companies and unlisted companies to a 2-year period.
2 or 3?
No, not. Remember, he took it to 3 for unlisted, he brought it down to 2. And my sense is there's going to be no tinkering around a change on 2. So the only possible change, which also in my opinion is unlikely, will be extending the period from 1 to 2 years. That's really it.
Okay, so that is your expectation. Ramdev, what about you? If there is some tinkering done, how do you think the market could take it?
I think market is already scared and they have already taken preemptive action. So I think some amount of tinkering is factored in the market. Okay. Because if you see the month of January flow, it's been as strong as last quarter, but there is no buying by the domestics. All the buying has been done by foreigners. In fact, for a change, foreigners bought in January and domestics sold. So they are all sitting on a lot of cash census. So they are waiting that if LTCG comes, then market dips and then they'll go and buy. Okay. So I think the biggest story of 18 has been the domestic inflow. And I don't think government will do anything and with the grandfathering, actually they will get very little money in this year also. So there is no business-like reason for them to do it. So I don't think if there is not going to be very severe, market is already priced in and a lot of people are waiting to get into the market, the impact is going to be very muted.
That's the thing, right, Udayan? I mean, Ramdev is actually the third person this morning who's told us that even if there's a tax imposed, this market is growing so much, there's so much money to be made that it'll be digested well. Is that your view too? Eventually.
I mean, I think a knee-jerk is inevitable if it happens. I don't think, I agree with both the panelists that it will not happen, but if it does, I think there will be one major knee-jerk reaction. I am not totally sure about what Ramdev is saying, that people are waiting in the sidelines so that the first dip will be bought. I think it will be such a big change in the minds of people that finally, it's not just a long-term capital gains tax. If the number of years changes, then short-term capital gains get extended by so many months and years. So I think there will be a period of disappointment, so you will get to buy stocks at lower levels if that happens, but it's unlikely that it will happen this time around. I think, as everybody's been saying, next year you're going to target 1 lakh crores plus of divestment again. You'd want market conditions to be benign to be able to do that. So I think net they will work out what works best for them, and I think probably letting it be for this time may be working out even financially better for them.
Okay, in fact, let's get some more views on the fiscal roadmap. Sajid Chinoy of JP Morgan also joins in. Sajid, welcome to the show. What are you penciling in terms of fiscal numbers for FY18?
I know there's a lot of concern in the bond market that given the revenue pressures in FY18 that the fiscal deficit could go even beyond 3.5%. But our sense is every time the government's come up against this fiscal pressure, they've kind of chosen macroeconomic stability and placed a high premium on that. So we still believe that the government will keep this year's deficit at 3.4 or 3.5, and next year I think credibly target or budget a small consolidation towards 3.2. So our baseline is FY18 is 3.4 or 3.5, FY19 this goes down to about 3.2%.
Jen of IIFL has also joined in now. Nirmal, good morning. What do you think makes or breaks the budget this time around? Because the market's going in fairly optimistic. I mean, if we don't get any tinkering on capital gains, are chances really high that we'll come out of it with a 300-400 point Sensex again by the end of the day?
Market last month has been very interesting because what we have seen is a very steep correction in small cap and mid cap. So I think market has been preparing for some bad news, but the absence of bad news can be very good news. So I will see a spike in small cap and mid cap again, because most of local mutual funds tend to invest in small cap and mid cap, and they may be sitting on a little bit of more cash than normal. So I think market is very interestingly poised, because the indices have not fallen, they've risen, but we have seen a very steep correction in small cap and mid cap, fearing something in the market. But I think there has been a lot of debate about long-term capital gains tax. On the positive side, finance minister can walk the talk and do some cut in corporate tax, which he had promised few years back. And if he does something which is significant and meaningful, the market will take it positively. A lot has to be done on agriculture, rural and job side. It's the first time in several decades that we are seeing our agriculture nominal growth is not growing. And I think even if the estimates are revised, it might grow just by 2 or 3%. That has been one key reason for a lower than expected victory margin in Gujarat. So I'm sure government will do something for that. They can increase subsidy. They can make sure that there can be direct benefit transfer for MSP or prices lower than MSP. So we'll see a lot of things happening on rural agriculture side or on job side. And from the finance minister's perspective, I think LTCG is a smaller issue to deal with. And I mean, if you don't want to rattle too many things, then he might leave it untouched and look at it after the elections.
Okay, well, I know everyone's focus is on the budget, but don't lose sight of the global markets, because there is a pickup that we're seeing over there. The Japanese market is now up more than 300 points, and the Dow futures are also indicating a green. And in our own markets, stocks like L&T are reacting very well to their numbers. Ashwini Gujral is back with us, so let's get a quick word in from him. Ashwini, for now, holding on to 11,065 on the Nifty, what's the strategy?
So if you must take a trade, I think financials of all kinds, particularly NBFCs and private banks, are doing extremely well. So you can take positions there, and in the absence of an LTCG, if the mid cap really fires up, I think a lot of these stocks are in that category. So that's where you should be buying. As far as calls right now are concerned, Avanti Feeds is a buy with a stop of 22.90, target of 24.50. IndusInd Bank is a buy with a stop of 1780, target of 1860, and IT space is higher by 100 points, the IT index. So TCS is a buy with a stop of 3160, target of 3300.
Let's slip into a quick break. We are back and we'll have more comments from Ramdeo, from Ashok and other experts in the run-up to the budget speech, which will be in Hindi this time and probably will be the shortest budget speech that you've heard in the last many years. We are back with that. Welcome back. About 7 minutes to go for the budget speech, so we are really down to the wire right now. Just time to get in a few questions in about the critical issues which the market's obsessed about as we hear the budget speech. Ashok, corporate tax. Should we expect a 1.5% kind of cut, or is it unlikely that he will do it in a year where he's struggling for resources?
So again, my view is there's going to be no corporate tax cut per se at the corporate tax level. Will there be some tinkering and reduction or elimination of DTT possible? But as I said, corporate tax per se, I don't see a reduction, because where does he get the revenue from? He's struggling to be able to get revenues of the type that were predicted through GST until GST is fully settled. Corporate earnings have been relatively muted, although third quarter is showing good uptake. We do know that it will be single digit for the whole fiscal year. With that background, it becomes very difficult. Also, don't forget that if he has to reduce corporate tax, he also then has to eliminate all of the exemptions, and some of these exemptions are directly related to manufacturing and employment creation. So at a time when employment creation is perhaps the single most important objective of this government, to try and cause sunset to clauses that encourage manufacturing, I think will be unlikely. The one thing that can happen though is, last year, remember, he had brought 25% to companies with 50 crores or lower than 50 crores revenue. I think that 50 crore threshold will go up.
Okay.
He could take it to 100 crores, he could take it to 200 crores. In a sense, he will show a move forward. And again, given that he is keen to please the smaller industries, given that they are the ones who got affected by GST and demonetization, that will perhaps go a long way.
Sonia?
You spoke about an aggressive divestment target as well that we could see. What else can the government do for revenue mobilization?
My own view is that other than really focusing hard, I mean the two areas where the government should really focus very hard is this huge amount of tax that is stuck in unresolved matters at different levels of the revenue machinery. I think government needs to have a single-minded focus to be able to resolve those issues one way or the other. Companies are carrying contingent liabilities, their earnings are getting discounted because of those qualifications in their balance sheet. Government is not getting the benefit of cash flows. I think the government must take it upon itself to say, how do I resolve hundreds and thousands of pending cases? And the latest statistic that I heard was that 0.2% of the cases actually have 56% of the revenue stuck. So even if you just focus on your A category and get those 0.2% of the cases resolved, you could actually be freeing up serious amount of cash over there.
Okay, Ramdev, I want to ask you about this divestment target for next year. There is general expectation that next year the target will be 1 lakh crores or maybe even more than that. Tell us how the street will respond to that number. Will it be delighted that that's a big source of revenue for the government? Will it be worried that such a lot of supply will have to be absorbed? What will be the street's reaction to a 1 lakh crore plus number?
See, then we have seen in the past these targets have never been met. So
this year it will be?
No, this year it will be, but I mean, even if you write some outlandish number, they go only to the extent they can do it. Somehow they have not, so even if they write a lakh crore, I think the absorption capacity is massive. I mean, you see the size of the issues, even simple NBFCs are doing. I mean, $500 billion has become like a minimum size. So, and the bigger banks are talking about multi-billion kind of a flotation. So, in this kind of situation, 0.5% of GDP, say 160 lakh crores of GDP. So, you're talking about I think even up to 1.5 lakh crore is doable. So, I don't think this kind of number has any disturbance in the market, going by the current conditions in the market. But don't disturb the market mood, you know, like first you disturb the market mood and then you say 1 lakh crore, what happens? I mean, even 10,000 crores is bad then. Because market is pricey right now. I mean,
yeah, we know that.
That's the be-all and end-all, right? Posturing. I mean, that's what the government could just end up doing by the end of the budget.
You know, the government does nothing. If there is no speech right now, if Arun Jaitley tells you that I decided not to present a budget, there's nothing in the budget for you. The market will go up. Yeah. Because you don't have capital gains, no bad news.
No news is good news, right?
No, global markets are going up in any case. We are underperforming all global markets. Budgets out of the way, the Indian market might actually play catch up with the global market as if nothing happened. So, you know, budget happened or did not happen does not make any difference. So one or two key things, you don't put out a very large fiscal deficit number for this year or next year. Next year, more importantly,
3% should be met, or even
3.2 is fine. That much people understand that 0.2% will not kill anybody. If you put out 3.4, the bond yield will shoot up, the market will crack. You don't want to do that. If those two things don't happen, the fiscal deficit, a wide number, or capital gains is not touched, the market is going up today. The rest does not matter. Small farm, infra, you know, those are immaterial. 10% growth in farm infrastructure spending and all will not help, not hurt. So I think the budget is a non-event barring these two things. If these two are not touched or the market's not disturbed, we are going up post the budget speech.
Okay, you agree with that, Ramdev?
Yeah, one of the things is that what we are missing is that what market is driven about is the corporate earnings. And for last 2-3 months, there is a upturn in a lot of industries. And we are in, I mean, in automotive, the situation is that most of them are suffering from lack of supply of components. You go to truck, you go to car, you go to motorcycle. They're just not having enough components to finish the products. Cement has also taken off in North. So there are a lot of good signs of final, visibility, and that will decide the market trend rather than the small provisions.
Okay, now ladies and gentlemen, we've got to turn to Arun Jaitley, and we are ready for what probably could be the shortest budget speech in recent history.